Good weekend, all. Ira Epstein of Linn Associates with your weekend edition of your agriculture wrap-up, and this is for Friday, and we're at the 25th of October, 2019, and we're about 1:45 in the afternoon. The cattle on feed report isn't out yet. I'll be covering that in my written commentaries later today, or actually Sunday night, I should say. Today, though, we did get good news, and it's that trade is making a very, very substantial progress between China and the U.S. for phase one. So the stock market liked that news, it's up. We're looking at the gold and the silver up pretty nicely as well today, the dollar even up. And remember, on Wednesday we have the FOMC announcement and a press conference. We'll find out what that does. But the market is already looking beyond that and saying, you know, even if the Fed cuts interest rates, they're probably going to stop here. And the market is absorbing that and actually seeing rates climb higher. In the soybean market, I wish I could say I was surprised that no beans were down. We've been looking for that market to get back on the daily charts to when it lost its embedded reading, at least its 18-day average of closes. You can see how that's down. And here's the funny part. Beans down 13 today as they're saying a U.S.-Chinese trade deal's happening, and soybeans are a major part of that. You figure that one out. All right. Let's take a look at monthly area chart of closes. We're up for the month so far, and the month's not over. We still have another week of it. That's up 14 cents. The support of the market's 885 or 920, even with today's decline. When you go to a weekly bar chart, for the week, the market's down 13 3/4 cents, most of that happening today. If you look at this pattern, you can see how the market's been working itself higher while harvest is going on, and now the market has got a pattern of higher lows, higher highs. What would break that pattern is taking out 981.5. When I put on moving averages, the support of this market on the 18-day, I said day, it's 18-week moving average since we're on weekly charts. On the 18-week moving average, it's here, but on the way up, if we come back a little bit, when the market first was trying to get up, the 100-week average was the resistance. You see that right there. So the market rallied through it. And remember, each bar here is a week. And on the way down, I wouldn't be surprised that between the 100-week and the 18-week average is where the support starts showing itself. What else do we look at? Let's come over here and understand what these black lines are. They're Bollinger Bands, a very popular technical study. And I teach how to use these, I think, in one of the better ways in my charting course. If you're interested in that, you just go to our website under the word education. And when you're there, you'll be seeing all the information about what I teach in there. It's 6 hours or so of videos that teaches you how to work with my theories. But in a nutshell, as the market started making the pattern of higher lows, higher highs, you had two resistance points, the 100-week average in green, the Bollinger Band. On a Bollinger Band, the algorithm is designed to keep the market trading within it 95% of the time. So often, the first time you hit it on an upside, even on a downside, the market can slide through it, but you're in a general resistance area. The market ran up a couple of weeks, 3 weeks. Now the market is starting to get its first correction off of that. Did it break any trends? No, but it's run into a resistance zone is one of the ways to look at it. And momentum in the market, while it had been pointing up, is starting to arc to the downside. In my head, I always think of harvest, and harvest brings more supply. The problem is the U.S., even with China buying everything they say they're going to, we're still going to have a very big carryover of soybeans. What do you do next year when you get that amount of them? That is where I'm getting fearful of these markets. When I look at the meal market, still a strong market with higher lows, higher highs. You wouldn't know that if you go to the daily chart. The daily chart has been coming down while this chart is still up, and support's back on this chart at 299.5. Momentum is up, bias is up. This is still in an uptrend, and I can understand we're in a first correction zone because it's really come up all this way, but I'd be looking for the support in that general area. And in the soy oil, that's taken over leadership. It's rare that soybean oil leads a bull market in beans. When it goes up, I have learned over many decades, it often means that the other part of the complex is suffering, and that's where you're at right now. But this market is up over the upper Bollinger Band. Now, that's over it this week. Last week, the market finished at 30.36. That was over the Bollinger Band, so that's 2 weeks in a row. The week before, the market finished at 29.83 under it. So you've got 2 weeks in a row. 5% of the time you stay over Bollinger Bands. When I get consecutive closes over it, I count each one as one of those percentage points and subtract it. So I give the market for next week a 3% chance of closing over that number. Does that mean I'm bearish? That's not what it says. It says that the odds favor 97%, the way I calculate it, that the market's going to let you come in if you want to come in at a price under that Bollinger Band. That's how I use it. In the corn market, what we've done is we rallied back to the 18-week moving average of closes and have run into a stall. You also have a pattern of lower highs, lower lows. This market's in a downtrend. If the market breaks, the first support's 374.5, resistance 391.5, and the downtrend gets broken if prices were to get over 402.5. Hasn't done it yet, but we wait and see what's happening. I think that the bears have control there. When we take a look at wheat, we've had a heck of a run from the 435 area up a full $1, and now the market is starting to back off a little bit. We have the swing line up. We have two levels of support that are close, the 18-week average at 496.25 and the 100-week at 488.75. The market momentum up, bias up, trend up until the market takes out 476.25. In the cocoa market, this has been a difficult market on the daily charts. The weekly chart's a bit cleaner. It's had a pattern of higher lows and higher highs. Momentum had been pointing up. It's starting to roll a little bit right now. For the week, we're down 51 points. If the market gets back to the 18-week average, which is currently 23.74, to do it, you've got to break through this low of 23.91. That would break the uptrend. So the market has to hold here. If it starts to roll down, I'd be a little nervous about that. Market probably wants to lose that up thrust. In the sugar, what goes straight up generally gets a correction in it. And you've gone from 1060 on a weekly chart to 1291. Now you're getting that pullback in the market. You still have the momentum is up, the bias is up, but you're not in a trend. You have a lower low and a higher high. You just missed hitting the Bollinger Band resistance. What is stopping the market on the rallies right now is the 100-week average with support under it at the 18-week, but I'm going to repeat, not a trend. In the coffee market, if you look at the daily chart, you have one set of action, but the weekly is different. On the weekly, you got a higher high, lower low pattern with a battleground that's been going on for 5 weeks or so now. Is it 5 or 6? At the 18-week average of closes. You missed it getting it there, but you pulled right back to it here, so I'll call it the 5 weeks out of 6. A lot of resistance right there. I don't see a trend on the weekly charts just yet. In the cotton market, you've now hit an upside target. I would not be surprised to see this market want to stall. You've gone with the higher lows, higher highs up to the upper Bollinger Band. Momentum is up, trend is up, but generally, be it a daily chart or a weekly chart, doesn't matter. I often look for resistance in the first challenge of Bollinger Bands on either side because it's a natural resistance or support zone in the market. In the cattle market, there's a cattle on feed report today, so instead of being with anything, I like to see the fundamentals, see if they justify what's going on, but I'd be quite concerned. You've had a rally here that's very large. When you get a $20 rally in the market, it's going to take a lot to hold on to it. It's meant what we call some price counts as well in the cattle. I'd be cautious. I'm certainly not bearish, but I'm not bullish up here either. In the hog market, each time that we come up to this 18-week moving average, we challenged it back here, we're challenging it again, the market just hasn't been able to get up and over it. What I'd like to see is the market close over that number. Actually, if you take out this week's high, which was 69.25, and you close over the 18-week, it'd be the first time since all of this that I would say that the market's going back into an uptrend. No, we're not there yet. I'm giving you the what if. Right now, I have a lower low, higher high, no trend whatsoever at all, so we'll see what goes on. You know, I've been writing a series, actually I said writing, I've been recording a series of reports, and they'll go off our website this week. One of them is on the silver market, and I'm pretty proud of that one. Look at where silver went today, 1835. And I just did yesterday the S&P report, and you take a look at the numbers in that, and I think you're going to be impressed. But what I really try to do for you is each morning start you off with my morning subscriber video. Now soon those special reports, they're going to be monetized. What do I mean by that? I mean, if you're not a subscriber to one part of my research or have a trading account with us, you're welcome to view them, but there'll be a minor charge for them. It's going to be included with our regular subscriptions. And what I try to do, and I get up 4:30 in the morning or so, and I read like a madman. Like this morning, I think I started recording for the videos. People have asked me, by the way, on these videos, what time do they come out in the morning? I publish them before 7 a.m. It'd have to be a problem with the computer or something. Sometimes they're 6:30, and that is Central Time. So they're out ideally before the markets are up and really running. Yes, electronic markets are trading, but you'll see, as America wakes up is when the volume starts coming into the market. In the middle of the night, you can hear pins drop. Yes, they're trading, but that's not where the volume is. So what I try to do is cover 40 charts on the futures and then 5 or so ETFs. And the idea on the ETFs is they are going to tie into the ETFs that are important to the futures markets. Now I'm going to give you the daily fundamentals at that time, and that's something I've really started promoting for it because I talk about what's going on, what to expect in different arenas, technical analysis. Then what I can do there that I cannot do in these videos that you're seeing is I could say buy here, sell there, do this, do that. Very, very explicit. Here, the government says I have to talk more generality of chart patterns and the like, which is just what I do. Remember, this also includes our QT Mobile. You're going to get a push notification when I publish these. They always come out in the same sequence. And you don't have to watch a 20-minute video, and that's how long it is. You can drag the scroll bar at the bottom. It'll light up if you're on our website, metals, meat markets, and the like. You'll be able to do on the side here, we've listed them, and you can click there so you can get right to the markets that you want. Or you can watch the full analysis, and you can watch it over and over during the day, up to 3 times a day. We limit it at that. Now, remember, the special reports are going to be included in this, and you get our QT mobile app. That itself we charge $40 a month for if you're not a subscriber with us. So the whole value, if you haven't tried it, $7.95 for the first 30 days. After that, it's $15. You can do a yearly subscription, and the yearly subscription comes in, I think it's $156 for the year, which is $13 for every 30 days, but you pay it up front. How do you find out more? Go to our www.iraepstein.com. Go under research. You'll see the different products we have. That's where those special reports are as well. The silver report probably goes off either on Sunday or Monday. We only keep them up 5 days at a time, and I'll be putting out regular ones. For you in the ag markets, I'm going to be doing them this week, so you're going to be able to see those as well. And I intend on rolling out a couple of reports a week going forward. I'm Ira Epstein. You have a great weekend. Thanks for watching, and I'll see you all come Monday.